So there are two types of traders in the stock market game on YouTube. You already know what I'm saying. There's the Forex gurus, the stock market gurus, riding around in the Lambos. We talk about it all the time, the chicken tendies for the win, and they're essentially just taking their subscribers' money, trading it, showing all of their wins, none of their losses, and doing that over and over again, which puts people into a false reality and makes them think that they can do this, but reality, the money isn't from trading, so then they fail, so then they buy more courses, so on, blah, blah, blah. And then you have the people like me, who kind of are actually on the market. They have a real understanding of how it works. They understand that it's not all glitter and gold. And what do? They warn you about Forex gurus or stock market gurus. Now, I want to kind of start a series for the people, I want to start a series for the people about stock market experts or fake or fraud, whatever you want to call it, where we go through a bunch of traders, we we listen to their interview, we take a look at kind of their lifestyle a little bit and everything like that, and we try to decide if they're an actual expert or if they're just kind of like a fake or a fraud. So I want you guys to help me out with this too. If you think they're fake or fraud, throw it in the comments. I'm not always gonna get it right. It's hard to tell. I don't live the lives of these people. I don't know any of these people personally, so it would be very hard for me to tell. But what we can do is we can take a look at the things that they say, the lifestyle they live, and their history, and that'll help us find out kind of how we want it to be. So today we're taking a look at Francis Hunt. If you guys haven't heard of him, he's been pretty much in the market for an extremely long time, something like 30 years. He has a lot of respect in the community, so let's just watch this video and see what we think about it. Okay, bad habits to avoid. Let's see what he has to say.
Yes, I've got a great webinar called Become Part of the 9% and on 91% lose in spread betting. And you've got to, there are so many things you would need to do to become part of the 9%. If it were that easy, everyone would be part of it. And there's a lot of intelligent people making up part of the 91%. And in fact, you will always vacillate. You'll be in the top 1 and occasionally you'll be outside the 9%. But what you do need to do is you need to potentially decide on a strategy that looks after all elements of money management. And we've discussed the risk reward, we've discussed losses. You've got to manage losses, that keeps you in the game. You've got to believe you have a system that will make more than it gives back. And it's winning. It will win and will lose all the time. No one is ever going to have 100%, so accept that losses are part of the game and manage that. Become as systemic as possible in determining what your setup is. So the more it can be reduced to logic, the better, and the tighter. And then you need to stick to the system as systemically as possible as well, which most people are incapable of with emotions, particularly after say.
So first off, I like to say, dude is looking pretty sharp in this video, He's suited up, he's got, the chart behind him, and everything like that. So he's relatively clean, he's a clean dude. Really, honestly, he reminds me of that guy, Bobby Axelrod's rival in Billions. If you guys haven't seen Billions too, you guys gotta check it out if you love the stock market, because really there isn't a lot of content to watch. We get things like Wolf of Wall Street that has nothing to really do with the market, and it's just all a ploy to show drugs, girls, and alcohol, and all of that. But anyways, everything he's talking about sounds sound. Could a guru just say this, and do a lot of gurus say this? Yes, because everybody knows what you're supposed to say. But yeah, just like, if you're going into a programming class, there's only certain ways that you can program something. Everybody can come at it from different angles, but to be successful, all programmers probably have the same mindset, possibly the same software or the same coding language that they have to use. And he's right. You pretty much have to identify, you have to make sure that when you win, you're winning more than when you lose. Like in the last video, we were talking about, well, if you lose 1 point, and if you win three points. You understand what I'm saying? And that's essentially what he's saying here. He's also saying, have a systematic plan, which is pretty much just saying have a trading plan. And he's saying that the most difficult part about it is not, making the trading plan. He's saying it's sticking to it. So I like everything he's saying right now. Still can't tell stock market guru or stock market, expert or fraud, fake. I don't know yet. So let's just watch a little bit more and see what's going on.
Losses. You'll be snake bite fearful, And after 3 wins, you'll be piling on twice the size. And that'll be the one that'll lose and give back all of those 3 wins and some. So that's where focusing on, if you had to develop a black box system, is not a bad process for defining your strategy. And that's what you find interesting. Observing charts, a lot of observation, a lot of drawing of charts, and a lot of use of patterns. Patterns are probably the most powerful technical analysis tool for me outside of the larger trend Dow theory.
So the larger trend Dow theory that he speaks about is basically this. The Dow theory is a financial theory that says the market is an upwards trend if one of its averages, industrials or transportation, for example, advances above a previous important high and is accompanied or followed by a similar advance in the other average. This is very interesting. This is something I've never heard of, and something I've really never heard of any type of Forex fake guru or anything mentioned. So right now I'm thinking that's kind of interesting. Now it says, for example, if the Dow Jones Industrial Average climbs to an immediate high, the Dow Jones Transportation Average is expected to follow suit within a reasonable period of time. And this is interesting. So essentially he's using history. He sees one sector go up and he knows all the other sectors that are correlated, and he knows that they'll move in the same type of way. So he said he basically uses this to decide how to play the market, and he uses trends. Now you guys know I'm an extremely technical trader. Technical trading is like my bread and butter. It's what's made me all of my money in the past 2 years. So him following trends is a very good thing, and I think it's good that that's really the things that he looks for. So right now I'm gonna have to say he's definitely dipping to the more expert side, as he's introducing me to excuse me. I'm just playing. But he's introducing me to things that I've never heard of and that you don't really hear anyone else talking about. Now, I'm going to have to look into it a little bit more, but now I'm leaning a little bit more just the way he carries himself. You see the suit. It's not typical of your traditional YouTube kind of like fake like stock market guru. It's a little bit different. It almost gives me more of like a hedge fund manager type of feel, you know what I'm saying? So right now I'm leaning a little bit more to the expert side with this guy.
To avoid
most trading mistakes made by beginners, even intermediates and occasionally even advanced people when they lose their heads, is to do with trade sizing. So they take a loss too big. There's no damage done in taking your managed loss. That's part of the game and being wrong. The problem is that recovery ladder when you then emotionally negatively respond to taking an already slightly bigger loss. So let's say you lose 15 or 20%, and then you think, damn, I want to get back to where I was, so I need to make 25%, so I'll trade bigger again. I'm sure I'm right this time. You can't cope with the mental, it's like a mental cognizance
I like what he's
dissonance.
saying. I like what he's saying.
Cognitive dissonance that makes you need to get back to where you once were.
Now I know I'm stopping the video real quick, but like I said, we're trying to figure out, is this guy a fake or is he an expert? Now, one thing that's really making me think that he is an expert is he talked about losing 15% like it was a big thing. He talked about losing 15% like it was very, very vital and that it will throw you into emotional trading, and I completely agree. Losing 15 of your account in one trade is insane and it's crazy. But the thing is, with these gurus, you see them all the time making all these big trades, all these crazy trades, risking crazy amounts. Like let's say they have a $30,000 account or something, you'll see them, you know what I'm saying, taking on like $2,000 losses and stuff. It's crazy, it's insane, and really most profitable traders will tell you that 10% that he's talking about will tell you, like, honestly, you shouldn't be losing more than 2 to 3% per trade. And yeah, that kind of makes it so you don't have as much to trade with. Your money's not going to be coming in as fast. But the difference between a fake guru and an expert is the expert understands that it's a long game. And I like the way this man's talking right now, I can't lie.
Because you're now seeing yourself as the lesser self as dictated by this balance. And that then pressurizes you into trading bigger again on what looks like a sure thing.
That revenge
now
trading.
You're punch drunk because you must find an opportunity quickly, and it's not a sure thing. It's the first thing you grabbed hold of that best represents a possible trade. So you then bastardizing your criteria to grab hold of something that you expect to leverage you back
to me all
into
the
where
time.
you once were. This is a
I'm not gonna lie to you, people.
fatal spiral, because once again you then overtrade because you've got to make back more to get back up, and that's the recovery ladder concept. And boom, that is probably the single most destructive that sees someone have a £10,000 account reduced to, you know, a few hundred or £1,000, and then virtually giving up, realizing that they've blown it. Size.
It's 91% of people are in that sort of category.
I wouldn't say 91% are in that category. They don't all blow their accounts up from £10,000 down to 9, but they aren't possibly consistent with money management as a whole. And sizing is one element of money management. Don't forget, I said risk reward should be central to that as well. So they're taking trades that aren't worth the squeeze. The juice isn't worth the squeeze, and the probability of win rates. They haven't tested what likelihood they have of winning. Too tight a stop, something else I've mentioned. All of those things all fall under the larger money management cluster, and those are all key.
So do you agree with this statement? The only way to make money is slowly and steadily over time, not trading forex indices, commodities, etc., because they're a giant.
Ooh, this should be interesting.
No, I wouldn't agree with that statement at all.
Hey, he's hitting all the baselines. Y'all know when he asked that question, that's actually an amazing question. Shout out to whoever's doing this interview, because it's really good. Because I want to hear it, because you guys know Forex is a little bit more risky. The indexes are a little bit, or the indices are a little bit more risky. You know what I'm saying? Those kind of things. 3 times leverage ETFs. You know what I'm saying? And so I really want to see what he's gonna have to say about this. But I was kind of like, because he's looking like he's an expert. He's been in the game for 30 years. He started trading in 1987, I think, in my research. And I went to see what does this guy think? Now, I've been profitable for 2 years now in the Forex market, so I'm not stopping despite what anyone says. But I still open my ears, you know what I'm saying, and I listen, especially when people have more experience than me.
Markets can be traded profitably on a consistent basis. There isn't an efficient market hypothesis that truly keeps everything at true value. Anything that involves people will have reactions and overreactions and underreactions. So no, I think you can. I think I wouldn't be in the game if I didn't feel that there was an edge that could be taken.
Wow, that was a good line that he really said there, guys. He said, I wouldn't be in the game unless I felt that there was an edge that I felt could be taken. This is the guys that you're trading against. You know what I'm saying? These are the people that are making money while you're on the other side losing money, frustrated at your screen. You know what I'm saying? And I think he really said a lot of good things here. He basically mostly talked about money management, which was winning more than, winning more than you lose, not using too much of a position size, basically not revenge trading, things that you'll hear in the stock market, on YouTube here a lot. So it comes down to, do we think this guy is a stock market fraud, or do we think he's an expert? So first I'm going to go into the appearance of him. Now, I know it seems kind of weird. Well, trading isn't about appearance, you know what I'm saying? You could trade completely in the nude and you know what I'm saying? But I'm just going to say he seems like he has a very level head. He shows up today to work, it seems, every day in a suit. Maybe he's in it for the interview, but I think I've seen this guy before, and he's normally suited up, kind of like a hedge fund manager, you feel me? So, and he doesn't seem like the type of guy who flexes Lambos and all of that crazy kind of stuff. So appearance, I'm going to give him an expert, in my opinion. You may differ, and if you do, throw it below in the comments. Also, next, we're going to get into the interview. Now, I think the interview was very good. I think he definitely said a lot of very important things. He put me onto a couple of concepts that I hadn't really thought about, that I'm gonna have to look more into, and maybe I'll be able to learn something from that. And he answered everything completely how I would expect an expert, or somebody who's very, very informed and been on the market and has a lot of experience to answer it. So I'm gonna give him an expert in that. Now, the last thing is his history. Like I said, he's been trading since 1987. He's been going through plenty of market crashes. He's dealt with it, and he's still talking about the market in 2020. In 1987, it wasn't even as popular, you know what I'm saying? It was what, about 2015, 2016, where all the stock market people started becoming like mini celebrities and popping up into YouTube. I don't know what the dynamic really was in 1987, but I feel like being a trader wasn't necessarily like a cool thing to be, you know what I'm saying? It was probably just more so something where everybody thought that you will lose your money. So I'm gonna say 30 years of experience. He's been doing this a long time. I'm gonna throw that into the expert category. So for me, I can't hate on this guy. He's given me no reason to hate on him, and that's not what we're gonna do over here at this channel. But we are gonna find some grooves that, you know, we can possibly hate on. You feel me? You feel me? So I want to hear you guys. I want to hear what you guys think. Maybe you guys have looked more into this guy than I have. Maybe you understand more. I want to hear it. You know, let's get the conversation going. Do we think this guy is a fraud, or do we think he's an expert? Right now, my vote is gonna have to be expert. So if you guys enjoyed the video, definitely like, comment, subscribe. We're on the road to 1K. We're gonna get there. I'm gonna keep putting in the work, so you guys keep putting in the work for me. And for all the people who have been riding for me, NGB the gang, you know who you are, and thank you for all the love and support. So you guys have a great day. Be blessed. And I'm not gonna say use the stop loss. Oh, I just said it. But maybe focus on your money management.